I guess if that were the case, then we'd see what we saw 10 years ago where everyone goes off it, and then after
Right,
Chernobyl, the same. So
right.
definitely don't want any of that. So if we go to precious metals, it's something that you said that gold has seen a massive leg up recently. It's sort of at all-time highs. And you were linking it to, I guess, this risk of what's happening in to the US dollar and potentially depreciation of it. Is that sort of what you think is increase the value of it, or is there something else?
I think in a rear-looking way, the answer to that's no. The buyers have been the central banks, and the central banks' motivations have been primarily the weaponization of the U.S. dollar, the attempted export of U.S. policy and political norms to other countries outside the U.S. dollar. The U.S. dollar, the United States government, pardon me, has tried to use the U.S. dollar to increase its influence in a bunch of countries that don't particularly want to be influenced by the United States. The consequence of that is that the countries have, of necessity, begun to substitute U.S. treasuries and U.S. dollars as both stores of wealth and mediums of exchange. We have seen consistent outflows from retail physical ETFs, which suggests that in Western nations, at least, the citizenry have not been active buyers of gold. In fact, they've been active sellers of gold. The gold price has moved up because the central banks don't trust the United States. And after not trusting the United States, they don't trust each other. So that the mediums of exchange outside the US dollar aren't really renminbi or yen or rubles or dinars or anything like that. Increasingly, you will see them short term in gold or in dollars. My belief, however, is that the ongoing deterioration of the purchasing power of a bunch of fiat currencies, but the most important of which is the US dollar, the reserve currency, will cause more and more human beings, as opposed to governments, to also view gold as a store of value. Anthony, it's worth noting that in the largest savings and investment market in the world, the United States, which accounts for, at last count, 23% of savings and investments worldwide, that the market share of precious metals related investments relative to other forms of savings and investment assets is less than 0.5%, which is to say that 0.5% of all savings and investment assets in the United States are involved in precious metals or precious metals related assets. The mean market share of precious metals over the last 4 decades, according to JP Morgan Chase, was 2%. So if we merely had reversion to mean, which is what I think we're going to have, you would see demand for precious metals and precious metals related assets in the United States, the foremost savings and investment market in the world, quadruple. And I think that's precisely what's going to occur.